course, the issue with the Chinese economic recovery has been that uneven path it's taken, manufacturing versus consumption and so forth, and services as well. What are your key takeaways?
Well, yeah, as you rightly say, the PMI might actually tick up this month, but this is really just a regular phenomenon after the Chinese New Year. But the broader picture is that the Chinese are really starting to tug the reins on monetary policy a little bit to cool down construction, and that is both infrastructure and housing construction. That's likely going to slow in the coming months, and the hope is that consumers will step up and replace that. But it's not clear consumers are really in the mood to step up just quite yet. So we might actually be in for a bit of a sequential cooling, just a tad, nothing too much to worry about, but really a tad of cooling in the coming quarters. And that stands in contrast to the US, where things are about to take off, really.
Where are you seeing the economy headed later in the year then, especially as some people expect with all of the infrastructure spending happening in the U.S., perhaps we could see those commodity prices rising?
Well, actually, we're a bit more skeptical on this. Mainland China still consumes well over 50% of global commodities from most major commodities, in parts over 60%. And so if you have the Chinese construction sector cool down, that usually is a headwind for commodity markets. Now, the commodities may remain fairly high, but it's hard to see a further upside, really, for most of the main commodities that feed into Chinese construction. That's iron ore, for example. That's, coal. We'll put that in as well, for example. And so it's not really looking like a super cycle. And the U.S. economy rebounding, it's great for services, but that's not very commodity intensive. So no, super cycle, no. Commodities staying here, perhaps maybe even giving back a bit of ground, but it's not going to be inflationary.
Fred, we've got a great story out about the potential overtaking by the Chinese economy of the US economy 2 years earlier by 2028, according to new estimates. That's actually 2 years earlier than the pre-pandemic estimates. What do the growth differentials then between the two countries look like to you heading into that possibility?
Well, in fact, there's been a lot been written about that the U.S. economy might even grow faster than the Chinese economy over the next 2 quarters. And that's certainly true in sequential terms. Probably we're going to see a bit of a pop there. But make no mistake, the Chinese economy remains a juggernaut. Even if it cools slightly at the margin, it will deliver just structurally higher growth than the U.S. and will gradually catch up. Is it 2028, 2029? Depends also on how exchange rates evolve, for example. But broadly speaking, it's just a matter of time before the size of the Chinese economy really exceeds that of the U.S. Now, when it comes to per capita income, that's, of course, another matter. But certainly the size of the economy, China is just about there really at the end of the decade.
Does that mean the conditions that you're seeing warrant a bit of PBoC tapering?
That's right. So they do probably do the right thing here, and that is that they have injected stimulus. The economy is back to its normal run rate, perhaps a little bit lower than that, but things have normalized in mainland China. So why keep the foot on the gas, just excessive gas? You want to make sure that you have a sustainable financial policy, that you rein in debt, because the Chinese policymakers are really looking not just into the next year or year after that. They're looking into the next 5 or 6 years, and they want to arrest the rapid rise in debt. And that's perhaps where the PBoC is a big contrast to the Fed. The Fed is prioritizing clearly inflation and unemployment and is less concerned about financial stability at the moment. But the PBoC is probably the other way around. And that's where you see this divergence in the central banks between the two. And it's even reflected then in currency markets at the moment.
Broadly speaking, what's the biggest differentiator between economic performance in this part of the recovery? Is it the vaccination rollout? And what does that mean potentially for parts of Southeast Asia, even in Australia, where the rollout has been incredibly slow?
Yeah, that's right. It really comes down, if you think about growth in the next 2 quarters, it's all about the vaccinations because we need a normalization of activity. We also need to, at some point, reopen borders. Remember, in Southeast Asia, many of these economies really rely on tourism, rely on travel in this broader sense, traded services. And so as long as we don't vaccinate the populations to a certain degree, then we can't really relax those restrictions. The other risk, of course, and that's something we see in India, is that unless the population is vaccinated to a critical level, there's always the risk of a renewed resurgence or pockets of resurgence, which then pulls back down growth. So we need the vaccine sooner rather than later.